In this video, we will look at when the attack on XCN Coin will start. Watch until the end. Before moving to XCN Coin, we need to look at BTC dominance. Otherwise, if BTC dominance increases, no money will enter altcoins, including XCN Coin. There is such a downtrend in Bitcoin dominance. This trend creates a significant opportunity for the altcoin market, because when BTC dominance falls, investors often experience a shift from Bitcoin to altcoins. For XCN to gain value and become bullish, this downtrend needs to continue and not break. If the BTC-dominated downtrend is broken and Bitcoin starts to regain strength, the pressure on altcoins could increase, and XCN's rise could be disrupted. Therefore, for XCN to realize its potential, it is crucial that BTC dominance maintains its current downtrend. XCN Coin is positive even though it is not broken. There is a noticeable uptrend in the Bitcoin dominance chart, and the price is currently close to it. If this trend line acts as a strong support, Bitcoin's market dominance could continue to grow, and pressure on altcoins could continue. However, if the price fails to hold this uptrend line and breaks to the downside, we could see some nice upside, including XCN Coin. And there is a strong area of support right at the point where it touches the rising trend line. This support zone marks a critical level for the direction of Bitcoin dominance. If the price holds at this support area and receives an upside reaction, Bitcoin's market dominance could continue to strengthen, and pressure on altcoins could continue. However, if this support zone is broken and the price continues its downward movement, Bitcoin dominance could weaken, pushing the altcoin market higher. Now let's look at the USDT dominance. If the dominance falls, it means that money is entering the market. XCN Coin may also be affected by this, so we need to look at it. Please do not miss these places. There used to be an uptrend line in the USDT dominance. However, the price has broken this uptrend to the downside and is currently in a retest phase to test the validity of this breakout. If the price continues to stay below this trend line, it could be a favorable environment for XCN Coin because the decline in USDT dominance indicates that investors are moving out of stablecoins and into cryptocurrencies. This is a good outlook. There is also a distinct falling trend line on the chart. Currently, the USDT dominance is moving below this trend, which could be a positive sign for altcoins. If the USDT dominance continues to stay below this downtrend, we will see a bullish trend in altcoins. However, if the USDT dominance breaks this downtrend to the upside, the market may start looking for safe havens again, which could put pressure on altcoins. Therefore, it is necessary to carefully analyze whether the USDT dominance will break this trend line. With the break of the uptrend, there is an increased probability that the USDT dominance will move lower. In technical analysis, when an uptrend line is broken, the price can often fall back to the previous support levels. Looking at the current chart structure, a breakout of this trend line would likely result in a drop to a certain level. If the price settles below the broken trend line and stays there, it may be possible to see a pullback to this specified level. And it is already retesting this lower level may be possible. And now we come to the question of when XCN Coin will start attacking. Keep watching so you don't miss anything. When we look at the chart of XCN Coin, there is a clear downward trend structure. As long as the price stays below this trend line, selling pressure may continue. However, if this falling trend line breaks upwards, we can see that buyers are gaining strength, and an uptrend may begin. If there's an increase in volume after the breakout, the uptrend may be stronger. Therefore, the price may want to retest after the breakout. There is also a prominent rising trend line on the chart. The price is currently quite close to this trend line and may react by touching it. If the price finds support from the rising trend line, it could start a new bullish wave from here. However, a break of this level could deepen the decline. Therefore, it will be important to watch carefully how the price reacts to the trend line. If it bounces off the trend, the uptrend will surely come. There's a bullish order block at the bottom. It forms a very important support level for the uptrend. The order block marks a zone where there was a strong buying pressure in the previous movement of the price, and the price changed direction from there. Such zones are highly likely to get the first reaction because at these levels, buyers are active and move the price upwards. If a decline occurs towards the level where this bullish order block is located, the price may have a strong buying reaction from this area because most traders may be waiting for it. There is a bearish order block at the top. It marks an important resistance zone where the upward movement of the price could be blocked. A bearish order block indicates a zone where the price previously encountered strong selling pressure at this level and reverse direction. Such levels are areas where sellers start to enter the market strongly and try to pull the price down. When the price approaches this bear order block, it may find it difficult to break this zone on the first attempt because the selling pressure may continue. After a few attempts, it weakens there and can now break it. According to the Elliott wave theory, the fact that the first and second waves have been completed and we are now entering the third wave creates an important technical structure. In the Elliott wave theory, the third wave is generally considered to be the strongest and longest wave and should generally extend to the 1.618 Fibonacci level. In this case, when setting targets for the third wave, the Fibonacci retracement levels are an important guide, and the third wave comes out of nowhere and no one knows what happened. Looking at the chart from a wide angle, we can see that the price action is forming a W pattern. As of now, the pattern is in the process of forming the second bottom. If there is a strong reaction from this low, the W pattern may be completed and a bullish move may begin. Such patterns usually give a strong bullish signal when they break to the upside. However, the price will need to break the neckline for the pattern to be confirmed. Let's see if it will make a strong bounce from here, and if so, bullishness will follow. There is an ascending channel structure on the chart. When we look at the price action, we see that it last touched the middle band and retreated from there. This may indicate that the price has entered a short-term correction. However, if the price manages to rebound and break the middle band upwards, the chances of the uptrend continuing will be strengthened and a move towards the upper band may come. Since it tried the middle band once, it has more chances to break it the second time. There is currently a squeeze in the Bollinger Band. This suggests that the market is moving in a narrow range and volatility is low. Such a squeeze in the Bollinger Band is usually a preparatory stage before the price starts moving in a certain direction. If the price breaks out of one of these narrow bands, a sharp move has begun. On the MACD indicator, there was a top-to-bottom crossover, which triggered a decline. Now, there is an upward crossover from below zero. This could be considered a positive signal, as a MACD cross below the zero line could be a potential bullish signal. If this crossover continues and the MACD moves above the zero line, the uptrend could become more severe. On the RSI indicator, there is an uptrend, and most recently, it touched this trend and got a reaction. This means that the RSI is starting to move up from a strong support level. If this uptrend continues, the potential for the price to move up also increases. The higher the RSI, the higher the price. On the Vortex indicator, the red line is currently on top and bearish. This indicates a bearish trend in the market. However, if the blue line crosses red, this could signal the start of a bullish breakout in the market. When the blue line moves to the upside, it indicates that buying pressure is increasing and a potential uptrend could start. So whenever the blue crosses to the upside, it means that an uptrend has started. Looking at the 200 EMA, we see that the price tried once, but failed to break above it. This suggests that the 200 EMA forms a strong resistance level. However, if the price can now break through this level, this could be the start of a major uptrend. A break above the 200 EMA is often considered a sign that the market is turning strongly bullish and buying pressure is increasing. The 200 EMA shows us a bit of the long-term trend. Yes, friends, I hope you liked the video. If you subscribe and like the video, more videos will come. Good earnings to everyone.